Silver spikes up, gets close to 23, then drops down lower, then shoots up higher on Monday, comes down, meanders around there, then shoots up higher on Tuesday, which was silver options expiration, then shoots right back down. Well, hello there, my friends. Chris Mark is here with you for Arcadia Economics. This is going to be a quick one. It's Tuesday night, but I did want to point this out. As you see here, a rather unusual silver chart. The blue line is where it opened Sunday. So let's call that, about 2286-ish. Silver spikes up, gets close to 23, then drops down lower, then shoots up higher on Monday, comes down, meanders around there, then shoots up higher on Tuesday, which was silver options expiration, then shoots right back down. So basically between Sunday night and now on Tuesday night, it's only a couple of pennies different. But as we've detailed and put plenty of evidence on, made legal files, we even submitted this to the CFTC's TPS whistleblower hotline. Only problem is Rostin Behnam, the acting chairman of the CFTC, he got caught with his hand in the cookie jar because he happens to be part of the plunge protection team that basically there's some of the henchmen for the exchange stabilization fund. All these little cowards that hide in the background and rig the economy and rob you of the value of your money and then suppress the price of silver right in your face after they get caught doing that. And of course, just never answer. But don't worry, as you'll find out, if you hit the subscribe button and notification bell, we have plans for them in 2022 as well. But just to put this one in context, much like Bart Chilton, the former commissioner of the CFTC, explained how the banks use these spoofs, which do go in both directions, both up and down. I was actually digging through one of the JP Morgan court filings where it shared how they often put bids to give the indication of strength. So imagine if just for whatever reason you overwhelm the market with bids here, pushing it higher, then you cancel them and you can push it and let it drop lower. You know, I'm not going to dig into the semantics of it today. You could just read any of the JP Morgan court filings for yourselves. They got caught. It's funny. People wonder why I feel comfortable saying this. Aren't you worried you're going to get sued by JP Morgan or Goldman Sachs? Since you call them demonic cult banks that have been stealing just like a mafia from their clients and really everyone on the globe for decades. Well, fortunately, I don't have to worry about that because I have plenty of evidence and they don't seem to have any interest in going through the discovery process. Neither does Rostin Behnam, and we can only surmise whether his silver investigation will look at today's price chart along with the interesting option structure, which I'm pulling up here. Now as you see here's the silver option volume and open interest, which in all fairness, I wish I had looked at this last night. Other things going on, didn't have a chance to do that, but so I'll say this is in hindsight, but I'll show you how you could have seen some of these clues because in this column here, that's the open interest. I don't know if my face is covering that or not, but traditionally the banks are short the contracts. They basically sell insurance contracts on a house that's already on fire and then just beat you over the head if you try and claim your policy and tell you that, no, that's just digital fire. But anyway, they're usually short. So you could have guessed that you wouldn't see the price want to go over $23. That's a 23 strike. Certainly here's 23.50, 417, and at $24, 758. So you would imagine the way, this is the way I would phrase it, or the way I internally look at it. I mean, I think there's going to be a day where it won't matter what they want. Obviously, that was not today because they got what they wanted. But I would say they would throw the kitchen sink because they would lose a ton of money if it had gone over 24 today. Big position at the 23 half line, but 758, 417, and down there on the 23 line is 878. Then what I do is look over at the puts. So puts, if you're selling naked puts, if you're shorting puts, that means you don't want the stock to go too low, or the asset in this case. So let's take a look here. Here is the 24 strike. Not a whole lot of, only 152 contracts there. Here is the 23 half, basically nothing, 55 here. So not much loss. Again, we don't know who's holding each contract, who's long or short. These are generalizations, but does not appear to have that there are large positions here. Then sure enough, at the 23 strike, you see a 537 open interest. 277 there, 433, and then 455. So basically, from the put side, you know, they would have been happy if the thing had stopped right at 23 and hadn't gone any lower, because then they have to start paying out of those contracts. Now back up, one last look at the call side. Here you see, okay, so at the 22, so these could have been in the money, 436, not small, but 22 half. So it's kind of like the mixed area. I mean, you're not always going to win on every single contract, but again, you look at 23 line. So basically, if silver finished right at $23 even, this 878 burger would expire worthless. The big number on the put line would expire worthless. The 23 half calls, 417 would expire worthless. And the 758 on the 24 line would expire worthless. I know I covered a few things quickly there, so feel free to pause and review this if you need. But let me summarize this. Imagine you own the 23 strike call and put, which we known as straddle. So if you own the 23 straddle, you're basically owning a bet that the asset price is going to diverge from that 23 mark by whatever price you paid, or hopefully more. So if you paid $1 for the 23 straddle, that means if your break even is if the asset goes above 24 or below 22. Now, again, you see that 878, the big number in the 2300 calls. And here's the 2300 puts, 537, one of the bigger put numbers. So basically, let's say one bank or group of banks, since they all get bailed out by the same taxpayer dollars, I mean, I don't really see them as much difference. I know they're different gangs mixed in, but back to the option for technicalities of it, though, let's say that this was 530, the biggest position was at the 23 strike. If you're selling insurance that you don't have to pay out anything, if it goes right to 23, then you understand why the price of silver closed exactly at $23 today, why it went up, why it went down, and also why CFTC's Rostin Behnam refuses to acknowledge this. We are coming up on the 1-year anniversary of his silver report, which is also going to be the 1-year anniversary of Silver Squeeze. Now, I wonder if the anniversary, maybe that'll be Silver Squeeze 2.0 TKO, knock these fools out for good. We can only see what happens, although I have some special coverage and events coming that weekend that I'll be looking forward to. We'll see if Ross can comment on any of these things before the 1-year anniversary surmises, or if he'll pull a Gensler, as they call it, in jail school and just ignore the evidence for years, leave the agency while people find all the crimes that you help facilitate, and then go run the SEC. Maybe that will be Ross Behnam's next job after Gary Gensler is removed from his office post for screwing his own constituents. One can only guess, but hit the subscribe button and the notification bell, and I'll keep you posted as it goes forward.